Welcome to, we're being recorded. Welcome. We are just going to wait a couple of minutes for everybody else to join. We've just got a few others joining now. So sit tight, finish making your coffee or your tea, and we'll get started in a couple of minutes. All right, we've got a few others joining. Morning, guys. Welcome. We're just giving everyone a few minutes to log in, and then we'll kick off and get started. All right, guys. Morning. We're just going to give it one more minute just for the last few to join, and then we're going to make a start. Morning, guys. Thanks for joining. Just going to give it 30 more seconds. Got a few more logging in, and then we're going to kick off. All right, guys, let's get cracking. So morning, welcome to Valiant Finance and Tax Assured's webinar. We are going to get your end of financial year ready. So the idea is that we are going to focus on tackling ATO debt and also talk around some smart financial strategies, conversations, tactical strategy you can be having with your clients as we come into end of financial year. I'm going to be joined today by Michael Moon, who's the Director of Tax Assure, and also Tom Jollye, Senior Advisor at Tax Assure. I'll introduce them shortly when we get into the ATO debt section of the webinar. Firstly, my name is James Pattison. I'm the National BDM at Valiant Finance. I've been with Valiant for about 3.5 years now. My background's about 20 years in finance across investment banking, and then the last decade in small business lending, running a business myself. So I know the joys and pains of running a business. And I'm working with our partners across the country, our brokers, accountants, financial planners, to really partner, educate, and support you guys to diversify into all types of commercial and business finance to be able to offer those to your clients. But where we'll start, we'll give a bit of a backdrop into where we're at with the landscape with business lending at the moment. So first half of the year has been really strong for business lending. And in particular, we saw one of the months in February where actually the business lending growth amongst Australian banks was actually outpacing residential lending. So we had a big uptake in that month, rose by almost 1%, by 9.8 billion to a total of 1.1 trillion. So there's strong momentum in the business lending landscape at the moment, and it's a really poignant time, especially over the next few weeks, to diversify into business lending. Because what you're going to find coming into end of financial year, it's one of the busiest times of the year for your clients seeking working capital, your business loans, line of credit. Also, obviously, asset finance is a real busy time of year, especially with the instant asset write-off scheme, which I'm going to go into in a little bit of detail in a minute. But really, if you haven't worked with Valiant before, we've been around for about a decade now, and we work with partners like yourself. We work with brokers. We work with accountants, financial planners to help you instantly diversify into any type of commercial and business finance. So we've got over 90 lenders that allows us to be able to work with you So your clients are able to access any type of finance. That's from asset finance to working capital, commercial property, construction development, and business acquisition. Basically, anything outside of residential mortgages, we can help you have a home for your clients for. And so we really, through education, through working with you, through your clients, try and get you in a position where if you haven't done much in this space, you can quickly get upskilled, get started literally today, and really become that go-to, that business advisor for your business clients so you can help them with that funding as they grow. In terms of some real tactical things that you can start with today, and this is going to be real poignant over the next few weeks, and then obviously coming into the new financial year with these big changes with the ATO debt, some simple ways where you can unlock with your existing clients. Most partners that I speak to have at least 20% of their current client book who are small business owners. So you've already got clients sitting there that might need funding. They might be going elsewhere at the moment for that funding. So some really easy, low-hanging fruit conversations or questions you can be asking, and we'll share these slides after so you have these questions. But simply, if you're already talking with them about their accounting, about their financial planning, if you're already doing a residential mortgage for them, just ask them, how's the business going? Are they seeing any cash flow gaps? Are they growing? Are they having any big projects coming on that they need support with? You can ask around asset finance, you can ask, what assets they might have in the business, get a feel for the age, the value. Is there any finance owing? And then we can look at, is there a way where we can upgrade or replace? Obviously with instant asset write-off, taking advantage of that. Is there a way where we can maybe unlock an unencumbered vehicle, for example, where we can raise capital against that to help them with their cash flow rather than the asset just sitting there depreciating? In terms of cash flow, the end of financial year, demand's going up. A lot of businesses will scramble over the next few weeks, and I see it every year. They come into the last week of end of financial year and they're like, oh, I'm running out of cash. I didn't realize I had enough stock or inventory or staff costs coming to the end of financial year demand. So again, asking them, is there any cash flow gaps that they're seeing with people not repaying? Is there a surge that they're going to need to cover over the next 3 to 4 weeks? Is there any big projects they're taking on they need to ramp up for? And so by asking those questions, it can really unlock opportunities for demand for business loans, line of credit type facilities. And similarly with liabilities, ask them if they have ATO debt with the major change with the payments on ATO debt, the interest no longer being tax deductible. A lot of your clients are going to be coming to you come 1st of July wanting a business loan or a line of credit to pay out that ATO debt. And so also things like commercial property, is it worth them buying rather than renting, where you can help them to actually purchase the commercial space? And also just overall what debts are in their business where we might be able to do a refinance or restructure, again, just to lower those repayments and free up some cash flow. So there's just some tactical questions you can start asking your clients today that, again, just might help them, unlock those conversations around their finance needs. In terms of the instant asset write-off scheme, we've got a few weeks now until end of financial year. Businesses who haven't taken advantage of this can still take advantage of it up to $20,000 for the asset, as long as they're turning over less than 10 million. And the scheme was really set up as a way for businesses to be able to purchase assets and get immediate tax deduction on that up to the 20,000. So it allows them to take advantage of having the asset in their business, being able to utilize that asset to grow, at the same time getting that tax deduction and that cash boost so that they've got additional cash flow. So it's a great scheme. If they haven't taken advantage of it, it's most types of assets are eligible, your vehicles, machinery, office equipment. There's a few things that are excluded to be mindful of. But definitely great time now for clients who haven't taken advantage of it to say, look, have a chat to your accountant, see if this would be worth your while, because it's a great scheme to take advantage of as we come into these last few weeks. But what I really wanted to do now is to move into the dealing with the ATO and the big changes happening at the moment with ATO and ATO debt. I think for as a nice little segue, we might run a bit of a poll. So you should see a poll pop up on your screen. And if you could just answer yes, no on that. Have you had a client in the past 12 months that has had ATO debt? So answer yes, no, and then we can go through the results on that. In the meantime, I would like to introduce our first speaker. So I've got Michael Moon. Michael is the principal and founder of Tax Assure. He is a seasoned lawyer, accountant, and business consultant with over 25 years of experience. He specializes in tax debt resolution and is known as a compassionate advocate. With a background in top-tier law firms handling commercial disputes and debt recovery, Michael crafts effective tax debt strategies. Michael, welcome.
Thanks, James, and thanks for having me. And thanks also to everybody that's sort of taking time out of their busy schedule, because I know now's a very busy time to sort of come and talk to us. And look, what I thought I'd do while you're doing the poll is maybe just quickly run over what we're going to cover today. One thing I would say, though, is I'd encourage you to throw questions into I think there's a question box there somewhere. Throw those in, and rather than doing a Q&A at the end, we're going to run this as almost as a Q&A through the whole thing. So throw questions at us then, and make use of the time we've got together, and we'll try to answer as many as we can as we go. But in terms of what we're going to, I guess, cover off on is, firstly, we'll explain to you a little bit about where the ATO is at the moment. And look, it's been in the press. I think there'll be no sort of, there'll probably very few people on the sort of the webinar who'd be unaware that the ATO are going very hard on business at the moment. So we'll talk about that, explain why that is the case, the impact on you and the impact on your clients. If there's probably one takeaway from today, which I'd like everybody to do, is to actually see this as an opportunity. And I always like to quote the Winston Churchill, what's been attributed to him: never let a good crisis go to waste. And we are very much in a cash flow crisis for many businesses out there. And we'll give you some numbers as to how many businesses involved, average debts. But the key around this is that there is a lot more businesses with ATO debt. And on top of that, the average debt that we're seeing has almost doubled, which means that a lot of the business that we might have in the past been able to sort through cash flow with long-term payment plans simply can't afford those, and they need funding. So you guys, particularly the brokers that are on the webinar, that are part of the solution, and we need you as part of the solution. And so there's not only there's a real opportunity, I think, to sort of, and that's why we've got the title, Grow Your Own Business, and it's why we partner with people like Valiant, because they have a panel of funders that are very, very comfortable with ATO debt. I speak to a lot of brokers around the country, and some of them say, "Oh, it's ATO debt, I can't do anything about it." I'm hoping at the end of this, none of you will ever say that again, and you'll know that you can do it. So we'll give you some tools around just a bit of an understanding of what the ATO is doing, some of the things that are happening which are going to drive people to you, and then, as we said, answer any questions that we've got along the way.
Perfect. No, thank you, Michael. And look, if you haven't seen the results, 71% actually have had clients with ATO debt over the last 12 months. So yeah, that's huge. We can see has been a growing problem, and there is a lot of businesses that are now looking for solutions. So yeah, good results there.
Not surprising, James. When we do these live, pretty much every hand goes in the air. So it's everywhere.
Yeah. Okay. Excellent. And look, what I'll do now is I'll also introduce our second speaker. So I've got Tom Jollye, the Senior Advisor at Tax Assure. Tom specializes in tax debt negotiation and financial complexities. Holding a master's in professional accounting and with over a decade of experience, he helps clients secure ATO payment plans and protect assets. Formerly General Manager at SR Group, he led business growth and strategy. Tom's expertise includes developing financial solutions and negotiating with banks and the ATO. With enhanced cross-cultural skills from international experience in Ghana. Welcome, Tom.
Thank you, James. Thanks for having us this morning.
Yep, no problem at all. And look, I think it might be good to get a little bit of an overview just before we go into sort of the details. Can you maybe just set the scene around, tell us a little bit about Tax Assure, how it assists businesses, and how business owners who find themselves with ATO debt, how you can help them out?
Certainly. So Tax Assure is a debt management company that assists business and individuals that owe money to the ATO. So a typical client is referred to us by a broker, some to Valiant brokers, accountant, or another advisor. That entity has ATO debt and is somewhere along the ATO debt recovery process. So that may be they're at the very early stage where they want to get on top of it. The ATO hasn't contacted them, all the way down to the wind-up stage. Anywhere along that path, we can assist. And we're seeing a lot of people and companies in that situation at the moment. So the four things that we can do once we're engaged is the first thing, which is really important is halt recovery action. So that could be to prevent risk of recovery action that hasn't happened yet, or further recovery action. Now, that's never been more important with things like the ATO being able to use credit reporting, garnishes, things to that effect. Now, in halting that recovery action, gives us time to develop a strategy for the client. So that might be a long-term payment plan, which sees the debt paid off over a period of time that ties in with their cash flow, or a short-term payment arrangement whereby brokers may be looking to refinance, but they just need a bit of leeway to get the ducks in a row to get that finance sorted, or it could be a combination of both these factors. Now, with negotiating payment plan, we prepare the applications, get the financials, and submit it to the ATO. Now, these aren't what the ATO is demanding. A lot of clients, we get they're spoken to the ATO and they're saying the ATO saying they need an upfront, they need this amount. We work with the client to orchestrate a payment plan that best fits their cash flow. And where this really helps with brokers is, we can do it to assist with serviceability that can help with, potential finance further track. A third thing we can do, which really assists, particularly with LVRs, is we can reduce the debt. Now, we do this through the remission of general interest charges. Now, we can often get 20, 30, 40%, sometimes up to 70% of that general interest charges remitted. Now, we can go back 10 years to get that general interest charges back, and we can get GIC, or general interest charges, that have already been repaid to the ATO. Just because they've got it's been paid back in the past doesn't mean that we can't go back to get that remitted. Now, this must be done properly. Now, that needs to be adhered to the legal practice statements, and we deal with that day in, day out through our application process. And the fourth thing that we can do is, even if your client is already in a payment plan, they may have panicked and quickly jumped into a payment plan that just isn't feasible or not viable. We can look to renegotiate that plan that is viable for the entity, and that can tie in with a potential refinance. So just because someone's in a plan doesn't mean it's viable, and we can come in and assist renegotiate that plan. So they're the sort of four main pillars and how we can assist clients.
Yeah, perfect. No, thanks for that, Tom. And I think it's a real nice way where you guys are able to advise on where they're at with the ATO, maybe a current plan. Is there a better way that they can be restructuring or repaying that debt? And then if they've got into a payment plan that maybe is a bit too steep for where they're at in the business, what are the finance options that maybe might be able to help them get into a better place on that one?
Certainly.
So, look, Michael, we've read all about, ballooning ATO debt, due largely to things like COVID. We had the recent bushfires, the floods. Could you tell us a little bit about that?
Yeah, absolutely, James. And look, it's in many ways it's a simple numbers game. We all know what happened during COVID. The ATO essentially stopped collecting debt, and they were saying even when we were contacting them and saying we'd like to put a payment plan in place for this and start to clear the debt, they were saying no, just defer it, and they were busy handing out money. And so what that meant was, if we look at the numbers, and look, there's a number on there, 53 billion. That's the current, in fact, that's the debt as at 30 June last year. And we think it's certainly well in excess of $60 billion. That's the undisputed debt that is sitting on their books at the moment. Hand on the heart, businesses owe it and just haven't been able to pay it. It doesn't include anything that's disputed or anything that's caught up in insolvencies. But to put that into context, that undisputed debt prior to COVID was around $26 billion. So it's more than doubled in that period. And again, if I'm right and it's over 60 billion, then it's well and truly more than doubled. What we also know is that 2/3 of that is actually owed by small business. So we're not talking the big end of town. We're talking normal businesses that, a lot of the people on this webinar will be dealing with, who simply have ATO debt. So it means that there are a lot more businesses with ATO debt. But as I mentioned before, there are the debts are much larger. The average debt that we would have seen prior to this shift, and we use COVID as a line in the sand, but it wasn't just COVID. There's economic conditions, and as you said, James, floods, fires. It's been a terrible time for business. But the average debt that we would have seen prior to that was around about $400,000. The average debt we're seeing at the moment is sort of tipping the $1 million. Now, businesses that might have been able to pay $400,000 out through cash flow Many of them simply can't, and that's where everybody that's on this webinar come in, because they simply just need to get cash into the business and either pay off some of it, pay all of it off, or use some funding. That maybe it's out of the assets that you talked about earlier, James, but get some funding to support a payment plan. So there's a whole bunch of ways that we can do it. But there is certainly a real pressure on the Commissioner to do two things: to get businesses compliant again, because a lot of businesses stopped paying, and that was partially following what the ATO said, but they got out of the habit of paying tax. So there's certainly a very strong message to businesses out there that the ATO is serious. And secondly, they need to bring that number down, and they can bring it two ways. They can collect it, which takes anywhere between 12 months and 36 months if they do it through payment plans, or they can write it off. And the way they write it off is they wind businesses up. Clearly, they'd like to do the former, but the imperative is actually to get that number down.
Yep. And, with the pressure you mentioned, there's pressure on the Commissioner. He's got to collect the tax debt, get taxpayers compliant again. How is he doing this? How is this being done really? And with businesses that have that ATO debt, should they be nervous? Where do you see, the ability to be able to help them out here?
Yeah, 100%. Look, it's a horrible time to owe money to the ATO. The ATO, I think, has traditionally been viewed as a very sort of almost compliant creditor, and a lot of businesses that we've been doing this for over 11 years, and businesses say, we're not hearing anything from the ATO. The landscape has changed totally, and particularly in the last 12 months, and it's no more complicated than that pressure that's on the Commissioner. We've got a new Commissioner in, and there's an imperative, as I said, to bring that number down and get businesses compliant. How are they doing that? A couple of things. Firstly, on a sort of more practical level, payment terms, they're much harder on those when businesses are going to, when I say businesses, it's businesses, taxpayers, it doesn't matter, individuals, we're talking, individuals, trusts, companies, sole traders, everybody. People often say to me, are they targeting anybody? Yes, they're targeting people with tax debt. So, but when they're going to them now, they've been much tougher on the payment terms, and we regularly are told by accountants we just can't get, because we get about 35% of our work from the accounting profession, and traditionally they've sent us the hard stuff. What they're saying now is it's all hard. So, payment terms have shrunk, but we're still able to push them out because we know where the ATO can move, and it's a little bit like a good broker who knows how to sort of position a deal with a funder. That's part of our role. They're also much tougher on the remission applications, as Tom mentioned earlier. Sometimes 20, 30, 40% of the debt will be interest, because it's 11.17% compounding daily, and all the brokers on the call can run that number fairly quickly and work out how quickly that adds up. So, again, during COVID, if you could spell the word COVID, the ATO would remove the interest. Now it's flipped the other way. They feel they've done what they've done. So they're much tougher on those. And again, a lot of the accountants that we are talking to say we simply can't get anything through. We are still getting them through, but we need strict compliance with legal practice statements, which is something that's always been there, but the ATO is really pushing those. But where the real rubber is hitting the road is the things that I've talked about on that slide. And you can see, we call them sort of the four horsemen of the apocalypse. And this is where, you talk, should businesses be nervous? They should, because the ATO is going very hard on each of these things, and it's not. And it's beyond this to, and there's no point. I'm not here to try to educate people on all these, but I think it's important for people to understand just what they are. A lot of people will know what they are, but just very quickly what they are. But I think the key takeaway from this is the speed at which things are happening in this area. When we started doing this, I used to say to people, look, you've got about 18 months to 2 years before you get from, well, they didn't have one then, but certainly the other three, from a nasty letter to the ATO is going to try and wind you up. Now it's a matter of weeks and months. We had one just recently, and within 6 weeks they'd gone from credit reporting to a statutory demand to wind up. So time is not on taxpayers' sides at the moment. It's also not. The old no news is good news is not the case with the ATO. It's quite the opposite. But just quickly running through them, we put them in this order because this is roughly the order that the ATO do them. They don't have to do them, but it's what we're seeing and doing. The first one is credit reporting. If you've got a debt over $100,000 and more than 90 days overdue, the ATO can send that to people like Creditor Watch. Why that's relevant to, I guess, particularly people trying to do funding on the webinar is it can, if it's already happened, it obviously very much limits the ability to get funding, because a lot of funders won't do it if there's a credit reporting on there. Secondly, what we are seeing, and we get a lot of these at the moment, where we've got a broker and they've been working through a transaction, they're just about to settle it, and they've been working on this thing and put many hours into the transaction. The funder's on board. They go to do the settlement, and the funder does a report, and there's a credit reporting there from the ATO, and it blows the deal up. So I always say, if I'm a broker and I'm out there and I'm doing a deal and there is tax debt involved, you must have the client in an active payment plan. If you don't, this can happen. It's the only way to stop it. Talking to the ATO, paying money to the ATO, none of that does it. They need what they call active engagement. Active engagement means an active payment plan. Director penalty notices, similarly, they are just a thing that allows the ATO to make directors personally liable for company debts. And again, this is something that will drive a lot of people to if it hasn't already happened for the people that are on this webinar, they if you're a director, you get one of these things, suddenly your house is on the line. You thought all the debt was over in the company. The two places they tend to go is to their accountant or to their broker to throw some money at it. So again, you don't need to understand any more than what they are, and the fact they've got very strict timeframes, and you need to act quite quickly on that. Garnishee notices are just a thing that the ATO can get money from third parties, that either banks or people that owe money to a business, and we all know what liquidations are. So again, the key to all of this is you need to these things are happening very quickly, but the ATO will deal, and there's always a solution to this stuff. The worst thing you can do is put your head in the sand.
Yeah. Okay, so we'd start the conversations early, get across where you're at, so you can take action at a time.
Yeah, and don't ignore this stuff.
Yeah. Okay. And I guess, Tom, it'd be great to pull you in. A lot of this sounds pretty damning. Is if a business does have ATO debt, are there things that they can be doing to avoid these types of things? What would you advise they should be doing?
Yeah, hi, James. Look, the bad news is the businesses can no longer ignore the ATO. If you don't engage with the ATO, don't worry, they will eventually engage with you. Now, there's two main things that can really help, and that's engaging quickly, and that's engaging properly. Now, too many businesses have been lulled into a sort of false sense of security during COVID that the ATO is not doing anything. They weren't contacting them, or they're being quite lenient, putting debts on hold. Now that's completely got out the window. Now, businesses also are the assumption, well, if we haven't heard from the ATO, then nothing must be going on. Now, just because you haven't heard anything from the ATO doesn't mean on their end that the cogs aren't in motion. They have a sophisticated recovery system, which Michael mentioned, the tools that they have at their disposal, things like DPNs, credit reporting, and they may be working through that process without the taxpayer being aware. So the sooner the taxpayer engages with the ATO, the better. The further you go down that collection process with the ATO, the narrower the scope gets in terms of a payment plan or the options available through. So to reiterate, engaging quickly is important. Just as importantly, engaging quickly is engaging properly, and it's probably more important. Now, many businesses are of the belief that they've spoke to the ATO once and the operator on the other line said, "Oh, don't worry," or that they've just left it with their accountant and think that things are fine. Often this isn't the case. They must lodge, in terms of payment plans, you must lodge proper applications that the ATO can approve. Now, they have a very certain set parameters of how they operate. That's outlined in the practice legal statement. And unless you address it in the proper manner, it's simply the computer says no. It won't fit within their parameters, and it'll just be rejected. So there's a long list of criteria that need to be met to get businesses into compliant arrangements. Now, these differ from taxpayers to taxpayers as well, depending on the size of your debt. Now, our team deals with this day in, day out. And what we're currently focusing on, and I guess what needs to be shown is that not only, you can't just say to the ATO anymore, yes, I can pay that debt over the next 12 months or over the next 24 months or even over 36 months. You need to show that that entity is viable whether that's providing cash flows, financials, and now we work with the client throughout this process to provide that documentation and to present it to the ATO in a way that will get the best optimal outcome for the client. Clients making voluntary repayments, though that, yes, that's bringing down the debt, simply it's not included as an active arrangement, and you're still liable for potentially open yourself for further action. So, yeah, I guess reverting back, be prompt, get engaged, engage early and engage properly through, get them into a compliant, get your clients into a compliant plan, and that is to follow the practice legal statements, which we can assist with.
No, thanks for that, Tom. And I think, look, it's similar when business is looking for finance. You want to start your search early before the business is in a position where they really need it, and you want to make sure you're getting that right advice to make sure you're getting the right business finance. So, yeah, sounds very similar with engage with the ATO. Michael, I think we've got a lot of brokers. There's accountants, financial planners on the webinar. Can you maybe explain how they can assist their business owner clients with ATO debt? How can they help them grow their businesses? Where do you guys support them to do this?
Yeah, absolutely. And I think, as I've probably said it already, but I'll say it again. If you remember nothing else from today's webinar, and I hope you remember a little bit more than this, but if you remember nothing else, going back to that, good crisis quote, don't waste a good crisis. But, that's a bit sort of, I guess a bit of a harsh way to look at it. But the other way to look at it is this: there's a lot of pain out there. There's a lot of businesses out there. We see a lot of business owners, directors who are doing it really, really tough. And, there are almost always solutions. About 95 to 96% of the clients that we see, we can fix. As I mentioned before, however, there's a lot more businesses out there and that are doing it tough, and the debts are bigger. So again, if you're in the finance game and you're looking to do this, as I said at the beginning, firstly, for goodness sake, don't ever turn away a client with ATO debt. It is manageable, and the way, if it's done properly, you do it with the ATO's engagement and agreement, and you get them out the other side. But similarly, we talk about growing your business when we do these. Particularly with live broker groups, I always have people come up to me and say, "Okay, how do I do this?" So go out into your networks, ask that question: have you got ATO debt? If you have, we can help you with it. Engage with Valiant. They've got plenty of lenders that are comfortable in that space. If you need management with the ATO, then we can certainly help with that to stop the ATO from, what I call blowing up the deal. And they're doing that quite regularly, and they're not doing it intentionally, but it's just that it reaches a certain point and one of those four nasties happen. And often that means that the director goes in a different direction and may go and talk to a liquidator as opposed to doing the funding with you. So, I just sort of, I say treat us as, I guess, as an extension of your business. Use us to distinguish yourself. You're in a very competitive market. If you can go and give a tax debt solution to a business that maybe their existing broker or they're talking to a number of brokers can't, well, obviously that puts you ahead of the game. The other thing is, and I think Tom's already spoken about this, we can get you time to do that deal without the interference of the ATO. If you have a deal and, for example, the funding needs to pay the debt out in full and there's not enough and the LVR doesn't work, we can help with that, because I mentioned before, 20, 30, 40%. I think the highest we've had was actually, no, I take that back. We've had 100% of the debt was interest, because remembering, as we mentioned, there might be $150,000 in debt sitting on the system. And of that sitting on the system might be $20,000 or $30,000, which is of interest, which is capable of what the ATO call remission or refund. But they might have had debt for the last 5, 10. I think the furthest we've got back is around about 20 years. And I wouldn't be suggesting we can do that in every case, but we might be able to help with that. So they still borrow the same money from you, but suddenly they've got all this extra working capital that they didn't expect to have. Some lenders will require them to be in enforceable payment plans. Obviously, we can assist with that. And then again, and also sometimes the servicing doesn't work, and so because you've got to factor in the ATO payments if they're going to remain. We regularly renegotiate those plans so that the payments come down and then the servicing. So this is all about debts that sorry, these are about deals that might not be a deal, but because of what's happening with the ATO, we can renovate it, if you want to put it, use that term, and then turn it in a deal for you. It's a big value add if you've got a client that's there and they're at risk of action from the ATO. Either the ATO may be winding them up, or they're going to end up in the hands of a liquidator themselves. Again, we can keep them viable, keep those clients, long-term valuable clients. And one of the things we certainly get told very regularly is that with the brokers particularly that we've dealt with, where we've gone in and fixed the ATO debt issue, is that they become, they're so grateful that, that's their broker for life. They're never going to look anywhere else because they've helped them out in a really, really difficult situation. So, and I guess the other thing too is that, you may just see a business, you're not doing anything with them, but they've got an ATO debt. People say to me, who can you help? Anybody who has ATO debt, vast majority of cases, we can improve the situation. We get the odd one where we say, no, don't touch anything. So that's the thing. And we've said down the bottom, we're happy to pay referral fees. So again, and if it's you can't help them and there's no deal for you, if you send it on to us, then there can certainly be a referral fee in it for you as well. So that's how we work. And I know that's a little bit sort of focused towards the broking thing, because I know you've got a lot on there, but it doesn't matter whether you're a broker or whether you're a financial planner or an accountant. It's all the same thing. We're here to sort of to get businesses out the other side of a really big problem, which is the ATO debt, and get them back into business. And it's almost always there's a solution.
Yeah, and that's great. I mean, in terms of solutions, I think we've got something like 30 odd working capital lenders. They'll all lend where ATO debt's in place. They can either lend to pay out the ATO debt, or they can lend to hold the business to grow while the business continues on the payment plan with the ATO. So whichever works better for them. So a lot of flexibility there. But I've got actually a question from the audience. I've got Paul has actually asked, is it worthwhile for the business owners to work with the restructuring companies that have popped up everywhere?
Yeah, good question. Sorry, was it Paul, did you say?
Paul.
Yeah, Paul, really good question, mate. Yeah, look, I have a fairly strong view on this. The flavour of the month over the last sort of 12 to 18 months has been the small business restructuring, which I'm sure many of you have heard about. The small business restructuring was brought in to help businesses that simply, came out of COVID, and simply businesses that couldn't clear that the mountain was too big for them. Again, I mentioned that figure around 95 to 96%. I think for the 4%, it's okay. Unfortunately, it's been used for the 90. It's been used as a panacea for anybody with ATO debt. There's a number of problems with it. So if you simply can't pay the debt, fine. But there's a number of problems with it. One of which is it's, even though it's sort of explained as a something that sort of sits in the background, it doesn't sit in the background. It's a public. It's public. It gets listed with ASIC. That affects abilities to get finance moving forward. It affects banking covenants, insurance covenants. And so it's not a simple, I kind of see it as very much not even a plan B, but probably a plan Z for that 3 to 4% that can't pay. The other factor around that at the moment is that the ATO went through a period where they were approving about 85 to 90% of the ones that were put before them. They're now not doing that. And I think they've taken a view, a bit like what they did with interest. We've given everybody a free kick. I've had another call this morning before this from another one, which is number 7 in the last 6 weeks, where it's fallen over and the ATO have refused it. And that's what we're hearing from a lot of the liquidators, because we do work with liquidators. Our job's to keep people away from them, but they do send us clients where it's just the ATO is the problem, we fix it and so forth. But they're all saying it's very hard to get them through at the moment. So, and it's dangerous because you've got all those things that I've talked about, plus you have to sign a declaration that the business is insolvent to qualify. And then if it falls over, you've got to go to the ATO and say, can we have a payment plan? It's difficult. So for the 3%, fine. Beyond that, I don't think so.
Okay. No, good to know. I've got another question from Michael. Michael has asked, how are you seeing the breakdown of the debt play out between GST, PAYG withholding, SGC, etc.? And is the ATO more active on enforcement action specific to the classification of the debt?
Yeah, I'll answer the second part first. Look, the answer to the first part is it hasn't really changed dramatically. If anything, probably super's a little bit less because of the single touch payroll and also the emphasis on it. In terms of how the ATO is chasing this, and I'm sure that Tom will agree, when we talk to a client and we run through the very breakup of the debt, if they have superannuation debt, that puts them into a different category with the ATO, and it's their pet hate. Because they say, it's one thing to take money that is owing to the ATO, but this is employees. And they go much harder on businesses that have superannuation, and they always have. If you think about it, if you look back and, obviously this is something we looked at closely during COVID, they put a hold on everything except superannuation. So super is a very different category, and we often say to businesses, particularly if they're a little bit, on the edge with the ATO supporting them, if at least we can get the super paid, that's great. And if we can't, we prioritise it in terms of our negotiations with the ATO.
Okay. And guys, feel free to put any more questions in. The guys will be more than happy to answer it. In the meantime, I guess, if one of the brokers, accountants, financial planners on in the audience wanted to get in touch with you guys, what's the best way to go about it? How do they engage with you guys?
Yeah, look, really, really simple. And, look, as you said with the slides, these slides will come out to everybody and so forth. But look, we keep it really simple. A simple email introduction. Prior to that, if you've got a scenario that you want to talk about and say, look, is this something you can help with? Then either shoot us an email or give us a call. We're a bit weird. We like talking about tax debt. So happy to have a chat. And, if we can help, and we almost always can, but if we can't, we'll tell you. And I think the main thing we need to understand is what you are doing for the client, particularly if there's a funding transaction on foot, because we need to sort of factor that into what we do. Then it's an introduction to the client. You can stay involved as much or as little as possible. As much or as little as you wish from there. We do a full review of their position with the ATO and provide them with recommendations and our costs. And we don't charge to do that because that's part of our fact find. As I've said before, we keep you informed along the way, and our fees are fixed and agreed. Broadly, our fees fall into two categories. We charge a fixed fee to do those first three that was on that list to stop recovery action and or the first two, stop recovery action and to get them into a payment plan. Those fees are agreed up front. And then the only other fee we ever charge a client is to get some of the interest and penalties removed. Because that's discretionary and we can't guarantee an outcome, we do that on a success basis only. But what we tend to find is when you roll all our fees up, because we save them a multiple of what we charge on the success fee, at the end of the engagement, we hope that we've, put them into the position where they're managed, where they are, they owe less tax to the ATO and have paid our fees.
Yeah, great. And look, I know Valiant works closely with Tax Assure, and so, we can partner and be able to put the business in the best position, not only with the ATO, but with their finance as well. So it's a nice sort of double hit there. I've had another question come in, actually. We've got a couple of minutes, so quick answer. It's from actually Alexander. Yep. Question: do you have a minimum turnover or minimum debt to work with a client? How is your fee structure and commission referral?
Yeah, perfect. Again, maybe I'll answer the first bit. The first bit is we have a minimum below which we can do it, I guess, so it's economically viable for us, but we're here to help people. So we don't really turn anybody away. And so we've got businesses with, anything from sort of $50,000 to $100,000 debt up to, in the millions. But, I mentioned for our average at the moment, it's around about that $1 million mark. But, if you've got a client and they've got $20,000 or $30,000 in debt and they're really good people and they need some help, then we'll either teach them how to do it, or we'll do it for them. But as I said, we don't turn anybody away. And so in terms of fee structure, I think I already explained that. There was another part to the question, James?
So it was around the minimum, and then also it was around how's your fee structure and commission referral.
Okay, so it was just that, yeah. Commission. Yeah, look, commission's really, really simple. For every client that becomes a client of ours, we pay a $500 referral fee. And, when we've done this in the past, I had one broker said to me, I'm going to send you 4 clients a month. He gets $2,000 a month on his bottom line. So, and he's been consistently doing that for the last 6 months. So, But, so that's how we work on that. The other thing too is that where we're seeing, I can't remember if I mentioned before, but where we're seeing a lot of engagement from brokers, particularly if they're about to settle a deal, is they'll come to us and say, we're about to settle this deal, there's a whole bunch of interest on that. Can you get that removed? Depending how much time we've got between when the settlement's going to occur, we can do it prior to settlement if we've got time, or we can do it after settlement. If we do it after settlement, it just comes back as a refund to the, it's one of the few times where the ATO will not literally send you a check, but they'll make a payment to the business. So getting back to what we were talking about before about that value add piece for businesses, value add piece for brokers with their clients, what a great thing to be able to do the transaction and say, no, we've done the transaction. By the way, I'd like to introduce you to these guys. They're going to get you a refund from the ATO.
Perfect. Love it. Now, something that I really like to do with our partners, I think it's a nice way where giving a scenario example or a case study can just make it a bit more real around, the types of problems you can solve, how you do that. Do you want to maybe we've got a couple of case studies, and guys, we'll share this after the webinar so you can have a read through.
Yeah,
Michael,
absolutely.
do you want to maybe talk through one of these?
Yeah, look, maybe that one's a good one because it links into what we talked about before. This was a construction company based in Brisbane. As you can see, they had a debt just under $1.5 million. This was one where they've been reported to the credit reporting agencies. This wasn't one where they were doing a transaction, but the impact of the reporting, and the ATO say they do that to get people to engage. And look, it certainly does get people to engage, but unfortunately, it can also blow up a business. Construction, as we all know, is really tough time at the moment, and margins are very, very tight. The impact of the reporting was twofold, because when they reported it to, I think this one was Creditor Watch, businesses that are dealing with this company, they have alerts set up. Alerts went out to them that the ATO had reported this debt. Two things happened. The funder went, I don't think we're going to support this business anymore. And it breached their covenant, and they said, we'd like to call this loan in. The second thing was that suppliers like Fuel and Bunnings and all those put them on COD. That business was finished. Fortunately, the broker was contacted by the funder and said, this is what we're looking at. What are you going to do about it? And so the broker knew us, contacted us. So we did two things. And I've said that, and they were also threatening the other nasties, but that was their immediate issue. What we were able to do is, firstly, we provided a comfort letter that was acted to the client, which was able to provide it to the funder and to the suppliers to allow them to continue to trade. And then we went in, got them into a payment plan that they could afford. They'd been trying to do that. Their accountant had also been trying to do that, and they just couldn't get them into something that they could afford, but we were able to do that. We had $260,000 in interest and penalties removed to reduce the debt, and the listing was removed. The good thing about the ATO credit listings too to remember is if you're doing a deal in the credit and there's a reporting that it's already happened, we can get it removed, but it gets permanently removed. Unlike a lot of other listings which stay in the history, one of the conditions of the ATO providing this information to the credit reporting bureaus was that it gets permanently removed. So, and then they were able to get on with business.
Amazing. That's awesome. And look, there's so many great stories that come out of, some of these scenarios, and so many of the businesses where they're able to get finance just to get them out of that problem, which, you're not only talking about helping the business, you're talking about helping the people behind it, the families, the community. So it's super rewarding work. Look, guys, unfortunately, we are out of time for today. I hope you've enjoyed the webinar. We are going to share the slides afterwards. If you need to get in touch, here's some details around how you can get in touch with either Valiant or TaxAssure. For Valiant Finance, we've got, we can generally turn around asset finance deals in 1 to 2 days. We can do it pretty quickly. There's plenty of time for your clients to take advantage of the instant asset write-off scheme. And working capital, again, utilizing that to either pay out the ATO or grow the business while the ATO is being paid out. So if you have any scenarios you want to chat through, any other questions around how to partner work with Valiant, feel free to drop us an email, give us a call. And likewise, TaxAssure, if you want to engage with them, drop them an email, give them a call. They've done some great work. We've been partnering with them for quite some time, and they've helped a lot of our clients. So more than happy to help. Michael, Tom, any last parting words for the guys?
Probably the main one is, is if you ask the question, you mentioned at the, you gave them a set of questions around sort of looking at sort of the the commercial lending. It's a similar thing. Talk to your clients, ask them about it. Have they got any ATO debt? How are they feeling about it? Because it is very, very likely that they will have, and they won't know what to do about it. And they'll be stressed. And you've got a solution. Whether you work with us or you work with their accountant to get them out the other side, I'm agnostic. We just want people to sort of stop worrying about the ATO and being able to focus on their business. If you're not sure, as I mentioned before, give us a call myself, call Tom, or we've got a whole bunch of people that you can speak to see whether there is something we can help with.
Yeah, perfect. Excellent. Well, look, thanks a lot, guys. It's been a pleasure hosting you today. If you need to get in touch, there's the details. We will be sharing the slides as well, and we look forward to working with you. Enjoy your day. Thank you.
Thanks, James.
Everyone.
Thanks all.